Hey, it's Mac with PriceActionTradingSystem.com, and it is Wednesday. It's April 8th. This will be our chart lesson for the day, and a really good trend today. It was, for the most part, all uphill. There was a couple of ways you could have looked at this. Some of you may have found the brown channel here. It doesn't help you a whole lot because this is your trend line. You do get some trades off the midline here a few times, but those are not really as reliable. And you really never come back to the main trend lines, which is what is really going to help you the most. It might have helped you find some of these targets, but you really didn't need them either. You're really going to have to hone down in to these smaller trend lines because this is a huge move. This was a nice rally today, and in the end, it's really you were better off to play this as a range day. And I'll show you that here in a minute. I'm going to remove this, but I wanted to put it on there just in case you looked at it that way and didn't see the range, just so you'd have something to compare it to. But now that you see that's gone, you can see we were in this range early on. We finally broke through, and whenever prices do that, just measure that range and look for that to be your next target. You can see that there. And you can see we ran up to that and sold off instantly. We actually pushed back through there a little bit, but by the end of the day, we closed back up inside this part. We went into another range right in this area right here as well. So you can see how that's pretty flat. We were finding resistance off that line and support off of this line, and that would have helped you find one of these really good trades over here. Um, so but really you were better off playing this as a range. Another thing you probably should have done too was measure this first. I really would have probably measured here. That's really the leg, or really from right here. Either way, uh, it's about the same distance, only a couple of ticks difference. And then once we started up from here, look for a measured move, and you can see we turned down right at that point. And then we started back up again here, so you might even just move this up for the next leg. And we didn't quite get there, but I think that's because the range was the bigger pattern, and we just couldn't really push through that resistance up there and get it to hold. It looked like it was going to hold for a minute for support, and it just turned right back down. So, um, but yeah, for the most part, this was a range day, and you were better off finding these trends, these smaller trends, and narrowing into them. So I'm going to back out here, and I'm going to wait to show you the second entries. The main thing one of the two things I want to talk about, and we'll combine them. Let me find it right here. This is it right here. This was after 2 o'clock, but it's going to serve the same purpose. Because what I want to talk about is a repeat pattern. Notice when we shot through this resistance right here. Notice what happens. We never came back and tested it until here, and notice what happens when we came back and tested it. I showed this same thing yesterday. Several of you had a question about, how would you ever know to enter there? And I got that question from a couple people. But I'm going to show you. Let me find the other chart. Okay, this is the chart from yesterday, and we talked about it yesterday, and I talked about there being a setup right here, and people were like, well, how in the world would you ever know there's a setup right there? That's really subjective. No, it's not, because notice you got a channel working there. You got a little spike and channel down. You get your break and a couple of legs down to a new low. So you've already fulfilled your downward thing, so you're probably going to get a correction. You may not get a reversal, but you're probably going to get a correction. Secondly, the whole reason prices were coming back here, and notice there's 2 legs down. This leg is much longer, but there's a leg correction, another leg. That's a 2-legged correction. If you went to a bigger chart, you'd probably see 2 legs down to there. So on a much bigger picture, that's a 2-legged move. The market moves in twos. We may get a correction there. But the whole reason prices were coming back here was to test this breakout. Notice when we pushed through there, prices never came back and tested it. And they almost always do. You don't always know when, but they're almost always going to come back, and they come right back here. And they test it once, they test it twice. And really, I would just look at this as the first test. So then you get the double test of that level right there. So then you get a double test. Plus, you're already expecting that prices are going to correct. And you got plenty of room back to the EMA there just to get a scalp. But a lot of times, these will be important lows, and look at it go. So I talked about this yesterday, but some people, this is, and let me clarify this is much more advanced. So if you're new and this is not making any sense, please don't start sending me a bunch of emails trying to explain it, because I just explained it, and if you have to, just listen to this part of the video over and over and over till it makes sense. But this is what prices do. They go back and forth testing support and resistance, and they always come back and test those places, and usually pretty quickly. So when they went through here and didn't pull back and test, when they started working lower, you had to assume this was a target. This was the objective of the prices. Yeah, they may go through and keep going, but when they give you a double test and a setup that we like to go to the long side, then you got to assume, hey, the objective was to come back and test that, and now it's done, and prices rocketed on off, and I think made another leg up. But either way, you got this nice move back up, and this was an easy to catch a runner right there. So now we go back and we look at today, and look at that resistance right across there, and then prices shot through and didn't test it, and they finally got back up here, a measured move to the top, and sold off. And where do they come back to? Right to that resistance. It acts as support, and it rockets off again. That's a repeat pattern. That's where I was really going with this. You see these repeat patterns. When you see a pattern once, especially in the same day, it tends to happen over and over and over. And really, that same pattern's right here where we came back to support. You made the low, and then you got the little double test. It actually broke lower, but it's the same thing as I just showed you on this chart. You got some support. It breaks lower. It doesn't close lower here. This is the same pattern right here, same setup. It breaks lower and fails across that support. That's a failed break lower. Boom, off it goes again. So learn to spot that. Notice we broke through this support, or this resistance right here, and that's not a real strong where we tested it multiple times. I mean, we really pushed through a little higher here, that backed up just a little and kept going. So that's not really a strong resistance. But it still wouldn't surprise me if prices don't come back and test that and bounce off of it again. If they don't bounce off of it, they'll probably keep going on lower. But it wouldn't surprise me, even if it's only a temporary bounce, that prices will bounce there when they come back and test that. And that's just the way prices do. But another trader was telling me he noticed this, but he noticed it in a little different way. He noticed the repeat pattern. And basically what he was noticing was, notice how prices will rocket up and then come back, and they come back and then take off again. Same thing here. They rocketed up pretty strong, came back real here, and then took off again. That did the same thing right here. It takes off real fast, comes back, and then boom. And so that's he noticed the repeat pattern and asked me about it. That's what prompted me to talk about it, because I don't know if I've talked about repeat patterns lately. So just remember, if you see a pattern like that, and especially during the same trading day, if it happens once, it'll probably happen again, and the pattern will probably repeat itself. If it was a winner the first time, it'll probably be a winner the second, third, fourth, and so on. So, and you may see it at a little smaller and bigger levels too. So in other words, what I'm saying is you may not see the big move like this. It might be much smaller like this. Here's a big move up, it kind of corrects, and then boom. And that's really a two-legged correction right there. Actually, it's not. The two-legged correction is the middle, is what I'm trying to say there. That might have been a little confusing because I was pointing up here. But notice you come up, two-legged correction, and then another move up. And there's really two legs up there as well. And so that's a two-legged move up as well. And then you get another move down. Remember, the market tends to move in twos. So you got two legs up, and in the middle of that's a two-legged correction, which will usually be the center of the pattern. So if we measure this first one, I don't think I quite got it all there. And then move it over here. And there's your measured move. So you'll see this over and over and over and over. So learn to spot it. Another thing I wanted to tell you is you notice people ask me about the colors on my chart. Really, the blue is the overnight. It starts at 2 on this side, which is really during regular trading hours, but that is our cutoff time. We don't take new trades after 2 o'clock, so I wanted to talk about that today. Another trader sent me something this afternoon, and he took a trade after 2 o'clock, and he didn't lose really because it was after 2 o'clock, but it just prompted me to remind people that generally it's not smart to take a new trade after 2 o'clock. If you're in a runner or something like that and you're managing a runner, you can carry that right on up into the close, because if your broker kicks you out, it's no big deal. You're in the profit anyway. So not a big deal. But if you take a new trade after 2 o'clock, a lot of times you'll get stuck in some real tight stuff that just goes sideways, and you can't get in. You can't really get a profit. You don't get stopped out, and then it runs into the different brokers are different. Some of them will kick you out a few minutes before 3, some of them right at 3, but most of them are going to kick you out 15, 20 so minutes before. Some of them might even be earlier than that, before the market closes, because you won't have the margin in your account. I think they automatically kick you out even if you do have the margin, rather than it's just easier for them to kick you out, and they'll just close your trade on you. And I've had that happen before, managing runners, and I forget that all of a sudden I look up and my orders, I'm out of the trade. I'm like, what happened? And I realize I forgot to close my trade, and it was going into 3 o'clock, and they closed it for me. So that'll happen to you. So be aware of that. And really, after 2 o'clock, just more craziness happens. I mean, you can get craziness right now anytime, but notice how orderly today was really, and then look what happened here after 2 o'clock. And because people start getting nervous, it's getting towards the close, and maybe some news item came out there. I don't know. Doesn't matter. But you'll see more craziness after 2 o'clock. So I just don't recommend trading after 2 o'clock. Plus, here's another part of my reasoning behind the 2 o'clock is if you have a loser early on in the day, you got all day to make it up. But if you have a loser at 2 o'clock, you don't have any time to make it up, and you're probably going to ruin your day. This particular trader that sent me something today, he had 4 winners in a row, and he could have quit and had a good day, but he talked himself into taking another trade up here after 2 o'clock, and it was a loser. So he ended his day on a loser, and rather than ending his day positive, he's ending his day negative. And if he's not a really good trader, or I shouldn't say not a good trader, but if he's not good with the middle part of it, he may carry that over into his trading tomorrow where he would have been positive, and that's never good. So keep that in mind. The other thing I wanted to talk about just real briefly is tick charts versus time charts. But this is a 5-minute chart here, and I have the whole day on here, and you can just see there's just not nearly as much price action. You can still trade this, but you're at a disadvantage because you can't see many of the intricacies and the setups that we see on a tick chart. So again, this is 5 minutes, and there's a tick chart. I mean, I got to back way out to get all the different stuff in there on this tick chart versus the 5-minute chart. And obviously you could probably say, okay, we could go to 3 minutes or whatever, but if you start going down to 3 minutes on time-based charts, you'll have a lot more trouble. It moves too quick, and you'll get a lot of false entries and stuff like that. But look at the size of some of these bars too. I mean, we get some big ones still with the 2000 tick, but we don't get bars like this too often. These big, huge ones. Um, so anyway, I mean, look at that. That is not hardly tradable right there. I mean, you really don't have much movement at all here. You're just kind of a lot of up and down, a lot of fake outs in both directions. But if you come back over to this chart, you can see you had a little trend up, a little trend down, a little trend up. And you don't see all that just little tight stuff going straight sideways. So it's much, that's why we like tick charts. You just get a better picture. You get, if you're trading time-based charts, you're definitely at a disadvantage in my opinion. So I hope that's clear on why we use tick charts. And just remember that no two tick charts will look alike, because I get that question a million times a day, every day. And time-based charts are static. Every one will look exactly the same. But tick-based charts are not static based on the way they count the ticks and the way you got to know. The only way our charts could look the same is if we turn them on instantly at the same time and you started counting your ticks at the same place I did, and that's impossible to do. Even if we were sitting side by side, they probably wouldn't look exactly the same. And sometimes the broker's data is a little bit different. Maybe some of them filter their tick some, or some of them you won't raw unfiltered tick data. And if they do filter it, you don't want it to be, I'm not sure, I don't quite understand what all they do to it when they filter it, but there's some forms of filtering your data that's better or worse than others, I guess I should say. So another thing I wanted to show you, trader asked me, where was, actually I think it was this channel right here. And he had drawn this one on there, this channel. I think he drew this one a little flatter too, and then maybe had a little steeper one here. And then he had this one, and he got all faked out wanting to know which one of those was right. Well, if you drew these two, they're both right. But what you have to understand, that's the beauty of price action, that you get this stuff going on at every level. So this is a shorter term, all this is a shorter term trend within the bigger trend here. And this bigger trend is just a trend within the range here. So you got all these things going on at different levels. But notice what happens. You got this trend working up, you get a break, two legs to a new high, and then you get a correction. It still plays out just like the big ones do in most cases. Not all of them will play out perfect, but most of them will. And so understand, you want to draw these trend lines and anticipate what's going to happen, but don't guess, because I mean, even if you took this, you still would have had a winning, you should have had a winning trade to the low side here. My guess is more people would have got faked out on that second entry right there than they would have. I'm just trying to see where you went short here. I guess if you went short right there, you could have lost out before it went down. But your second, you really don't get a second entry short there. First entry, actually there's a second entry short right there, and a double top, and you're way away from the EMA. So even if you were trying to be aggressive and went short there, that would have worked. I can't remember where he went short, but somewhere in there, maybe he tried to get short here and got faked out. But don't start trying to pick tops, because wait till you get a confirmed trend in the other direction and then try to go short. When you get really good at this, you can try to pick some of these trades up here. You can try to pick a reversal. But until you get good at it, just like right here coming down, don't start trying to go long until you get a trend going this way. Because you'll buy one of these down here and get all messed up. And so that's a little more advanced. So just because I talk about something, don't, if it seems a little more complicated and you don't quite get it, stick to the easy stuff for now. I mean, it takes a long time to where you get really skilled at this. So stick to the easy stuff, and don't be, every time I show you some little something, don't try to do it, because most of the time it just leads people to losses, and they come back scratching their head like, I saw you do this, but it ain't working for me. Well, that's because you're you don't understand the context behind it, and you're just, it looks similar maybe, but it does. You gotta, it's gotta, you gotta know the context and what prices are doing. Just like when I talked about prices breaking through and then coming back and testing that breakout right here. You know, if you don't know that how to read this chart, you don't know that prices are probably trying to come back here and test that before they go higher again. So anyway, I hope that's helpful. I'm going to show you some of these second entries real quick, and then we'll wrap it up. See if I can keep it under 30 minutes today. But I circled the second entries like usual. Red or blue are good second entries that basically I just circle the easy ones to spot. That should be fairly easy. And I did circle a few of the black ones again as well, just because they're easy to spot and they're in good locations, but there may be some reason they're not good trades or whatever, but I still circled them. So I mean, there's 2 or 3 right here, right out of the gate that are with the trend, the whole 9 works. And you take these 2 or 3 and look, you're done by 8:30 or 9 o'clock and you're done for the day. Go play golf, go play with your kids, go play with your dog, go sleep, go read a book, go to the movie, whatever you like to do. I mean, that's, get your trading done as early as you can and enjoy the rest of your day. I mean, that's the whole idea. I mean, for those of you who don't know my story, I worked in corporate America for 20 something years and I got sick of it. I wanted to do something I liked, and I wanted to have more time up to myself. And la-di-da, look what I've worked myself into here with this teaching. But at least I'm liking what I'm doing. And you know me, when I want to take a day off, I take it. So, but anyway, you got a new high right here. First entry, second entry. Look where that trend, right off the trend line, right at the end. When you see the EMA and the trend line running congruently like that, and you get a setup at it, take it. And that's an easy trade right out of the gate. You didn't get a runner here. It comes back. But now you get your break of your trend line. And so it's probably going to try to correct up here. But if I still get a good second entry, there's one right there. The key right here would be, do I have enough room to scalp out before I get back to those highs? If I do, this is still at the key entry point. We've only got one leg so far. We're probably going to at least try to get another one, and if it's a measured leg, it's probably going on up like that, but we had the resistance here, so we didn't make it. But that's what you're thinking. You would at least expect prices to probably get to this resistance, which they did. And but there's a second entry. You made another new high, and then another second entry right there. That's a double top, but still you can count it either way. First entry, second entry, and this is basically a repeat pattern of that one. So as long as you got room to get out, but it didn't matter, it went on up. So there's 3 second entries right out of the gate, right at 7 o'clock, and you could be done. You could have 3 winners by 8:30. And that's the 3 first, second entry. It's only 3 second entries you've had either with the trend. So I mean, it's really relatively simple. Notice you got another second entry there, but look how that shot down through the EMA. You're probably going to get another leg here, which you do. So on a bigger picture, you got 2 legs of correction. I marked this one. Notice there's a new high, first entry. You pull back second entry. You're probably going to come back to the EMA even if you're going lower. And you don't really know that you're going lower here yet because this is a range day. We did come off the highs, so there's a good chance we could be going lower. But you're probably going to come back to that EMA. And so you're just really looking to get a scalp out of that one. Of course, it comes all the way back up. Then we start working lower. Finally, you get a second entry short right here. There's some other reasons you might go short up here, but I'm not marking those. I'm just showing you easy second entries. Move that out of the way. The reason I don't like this one's the signal bars are very neutral. Notice that's a doji, closes right in the middle. So by that time you got 1, 2, 3, 4 bars. Even this one, notice how they don't really go anywhere. They kind of hang around, but they're still following that trend line down. So it's still a second entry. If you got a good signal bar, I'd have said take it. Make another new low. First entry, second entry, right off the EMA. That's the first break of your trend line. And notice you did have an overshoot there too. So that would be another reason, because soon after you're usually going to get the break. And notice how we did get a break. So now you're probably going to shoot down to a new low, but that's a good second entry. Looking for a retest, and look at it go. And then it gets down here and it reverses. Just, don't try to pick these bottoms. Just wait till you get a entry going up. There's actually a nice second entry right there. Horrible signal bar. I didn't mark it, but let's just mark it. Because it still works. And people like me, people say it's really helped them, me showing them these. So look at that. First entry, second entry. What is that? It's 2 legs back to the EMA. And boom. Off it goes. And you could measure that leg. In case we go higher, see where the next target is. Guess where it's at? Right there. We started correcting. We ended up going higher, but that would have been a great target for you. There's really 2 legs back here, but there's a lot of swing. You can count that as a double top. Then there's a second entry, but not a very good signal. And then you get your next leg down. So there's really 1 leg, little double correction, another leg. And so if you looked at it like that, there's really a 2-legged correction right there, back to the trend line. You probably wouldn't have had this trend line unless you're really good at this. You might have found it off the highs and drug it down here, but probably unlikely. But all the same, you could argue for that on a larger picture to be a second entry. But just wait. Here's another good one. This one I probably should have made it black, but it's off the key entry point. Notice your new high, first entry, second entry. There is room to get out before you get back to this. This was the overnight resistance, the high of what looks like a possible range. But we made a much higher low and we're going up here. So if we push through here, we might get a measured move. So you may take that as long as you got room to get out before you get here and see what happens. And and it just keeps going higher. Then it gives you a pull back first entry, pull back. So there's you another second entry right off. It was a little bit of resistance there. It acts as support. Boom. Then we start working down. We actually get an overshoot. So now we're working down and you get a little second entry short right there. It's a break. Notice you got your channel, you get a break, a new low, and it's going back again. But notice that low, first entry, second entry, nice little bar. Relatively small bar for a change, not real risky. Quick, easy move, and prices are probably coming back to test that support again to see if it holds before they go higher. If it doesn't hold, we'll probably work back lower. Guess what? It holds, so we work higher. There's another little 2-legged move back. So it's probably the center of the pattern there. So measure that first leg. There's your next one, and there's your measured move. And if you got a good signal here, you might take that second entry. Then we start working down here. We kind of go into this range. Notice the support, and we got resistance up here. But we're working lower. First entry, second entry, and that's a relatively bearish bar. Just go short there. And you finally get a break. First entry, second entry, a double test up here, that way away from the EMA, and look at it go. You catch that trade with a runner. I've circled this one because there's a second entry. Notice that low, first entry, second entry. It actually broke higher and turned down. The key to this one is you're going short right into that support. I probably wouldn't take that. But even if you did, the key is, do you have enough room to get out right there? If you don't take that. If you don't have enough room to scalp out before you get back to that support, don't take that trade. And then I marked this one because it's like a repeat where your prices, this was your resistance across there. Really, it's just turned into support now. So, and it's a little failed break lower below all that. Look how many times we bounced there. And it's a second entry long. Notice that new swing high, first entry, second entry. Again, it's aggressive and it's a little bit more advanced. So if it doesn't make sense to you, just don't worry about it. But it is a second entry long too. But what will confuse people is like, well, you know, you tell me not to pick bottoms and so forth, and uh, you know, and you're really trying to pick bottoms there. So so new people are better off to wait till you get a confirmed trend. But let me back out and explain something. Look at the big picture. What's the big picture today? The big picture is up. So at some point, the bigger bias is up, and you know this is playing out. You know this is strong support, even if the trend channel was still good, you might get this trade. But you've already had a break and a new low. And guess what? There's a two-legged correction in there too. So measure that first leg. Look for a second one, and you can see we went way past that. So now you're moving up. We talked about one like this a minute ago. It's a little two-legged correction, second entry, but the key is, do you have enough room to get out? Probably not right there, so I still marked it because it's a second entry with that little trend going up. But this is what you got to be worried about. Look how many times prices have turned down right across there. Don't risk going long into that. And then we just shot right through it. And now you get a break of this channel. You got a little close outside, but that's not very convincing. So notice you finally get a convincing close outside, a couple legs up to a new high. And notice this, this is really all one leg. So that's your first leg up. Then you get a two-legged correction and a measured leg. And then it sells off. You get a correction anyway. So hope that's pretty clear right there. That's well into the 2 o'clock hour. But notice what happens. It breaks through there, that repeat pattern. It comes back. That's what prices were rushing back here to do, is to test this. And it turns bullish. And look how far away we are from the EMA. And look, coming down, first entry, second entry. That's a second entry long. Retest. Way away from the EMA. That's aggressive. So for you new guys, be real careful. Don't go try to, repeat that yet. Wait till you understand it. But for those of you that are at that point, that's what you're looking for. And look at it go. So anyway, 32 minutes. I'm going to wrap it up. No more time today. We'll be back again to do it tomorrow and wrap up our week. But I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.